Yeah, it's clickbait. It's clickbait. But SCHD or SCHD and SCHG or SCHG are going to be much closer to zero than today's prices in just a few weeks. Plus, we're also going to talk juicy dividends now that these popular Schwab ETFs are paying out big dividends in this video. Now, of course, the reason SCHD or SCHD and SCHD or SCHG are going to be closer to zero is it's not because all the stocks it owns are just simultaneously deciding to suck it up, but instead it's actually because of the elusive stock split. Now you see SCHD, they're going to be having a 3-for-1 stock split on the close of October 10th, and SCHG will have a 4-for-1 stock split on the close of October 10th. Now, many of us are quite puzzled. Typically, companies or ETFs do this when the share price just gets ridiculously high. Costco, we're looking at you. With nearly $1,000 share price, let's get to some stock splitting. But SCHD trades at an affordable $84, while SCHG trades at $103 at the time of this recording. Now, these will be trading in the $20 range after the stock split. It's even more puzzling because most brokerages nowadays allow for fractional shares. So why did they do this? What was Charles Schwab thinking? Well, this is actually a broader change to Charles Schwab. We're talking about the asset manager of these funds. The Schwab Asset Management is actually splitting shares on 2/3 of its 33 different ETFs. SCHG and SCHD just happen to be caught up in this list of stock splits. The lower share price will make the funds that much more appealing to financial advisors and retail investors like us, thanks to the lower entry price point. Thus, more money for Schwab, more assets under management. If more people buy into the fund, this is what they're aiming for. It's really that simple. There's no hidden message, no symbolic meaning, no need to look at what Ryan Cohen is tweeting. Just look at what Uncle Cody is buying. Remember, stock splits don't change anything about the ETF or the companies. The only thing that changes is the shares outstanding and the price per share. If you're a crappy company, you're going to remain a crappy company. If you're a well-ran company, you're going to remain a well-ran company after a stock split. The best metaphor that people always use, just because it's a great visual representation of what's going on, is if you have a box of pizza, some Domino's pizza, let's say, sausage flavor, of course, only the sausage. If you split it into 4 and then split each of those slices again by 2, you don't just magically have more pizza, right? You have the same amount of pizza, it's just split into more slices. That's exactly how to imagine a stock split. I saw a very big YouTuber, close to 100,000 subs, going over the SCHD stock split, and he incorrectly said this will now have an increased chance of cow pounding. What is it about cow pounding that you morons don't understand? Nobody seems to be using this word correctly. You're not going to cow pound any faster by doing a stock split. You're getting exactly the same amount of dividends as you would just owning the shares before a stock split. You're just going to now own more shares, and the dividend will be reflected in that stock split as well. And if you're a longtime viewer of this channel, you know that SCHD and SCHG are owners of high quality companies. Let's go over that real quick. So SCHD, its holdings include Home Depot, Verizon, BlackRock, Cisco, Texas Instruments, Pfizer, Lockheed Martin, Bristol-Myers Squibb, Chevron, Coca-Cola. Those 10 companies make up 40% of the fund. They also own 103 different holdings in total. You can see they're very well diversified across the several different sectors. This is a great ETF for so many reasons, but diversification and high quality companies definitely come in at number 1. SCHG, meanwhile, has many great companies as well. It's mostly focused on tech, 50% of the portfolio, but they do have some other sectors, healthcare, consumer cyclical, communication, all hitting over 10%. Some of the biggest companies include the usuals: Apple, Microsoft, Nvidia, Amazon, Facebook, Google, Broadcom, Google again, Eli Lilly, Tesla. Those 10 make up 59% of the portfolio. That's a pretty large amount concentrated in just 10 positions, but that's the stock market these days. So altogether with SCHG, you're getting 231 different companies. But the criteria to be in these funds is quite impressive. You have to have different growth characteristics. You need to have certain dividend criteria, diversification in different industries, financial strength, right? These are all things that good investors should be looking at when making their investments. But SCHD and SCHG, they do it all for us. All the work is done by the algorithm. It's constantly rebalanced every quarter. It's constantly reconstructed every year. And they trade for a super cheap expense ratio, 6 basis points for SCHD, and then SCHG has an even lower expense ratio of 4 basis points, $4 for every $10,000 invested. Expense ratios can really make or break long-term returns. This is your chance to choose. Are you going to continue to be a broke loser? Or are you going to finally get on the SCHD and SCHG train? Many of these high-yield dividend warriors, they are often confused when looking at a chart of SCHD and SCHG. Many of the warriors are used to their stock charts going down and down, pretending that NAV erosion doesn't happen. But when I look at the charts of SCHG and SCHD, you'll notice this crazy thing. The stock price, it actually goes up and up. It doesn't just keep going down and down. It's almost if NAV accretion is happening. They're so used to believing in hope for their investments, Charles Schwab, it actually puts it to action. SCHD is up 55% in the last 5 years. SCHG is up a mind-boggling 145% in the last 5 years. It's easy to see how quickly these ETFs can build wealth and how simple it is. Why would you want to be a stock picker? Why would you want to put your emotions into it? You're going to have to stop the world just to stop the feeling that SCHD gives us. The high-yield dividend warriors, they will say stop collecting SCHD gold bars. Are you going to believe in their foolish nonsense? I will gladly collect these SCHD gold bars. I'll put them on full display so that the high-yield dividend warriors know how much money that we're making and how much money that they're losing. This is what's going to help us go from a middle-class family to a top 1%er. Now, it's not just capital appreciation. We also get paid big dividends, not dividends, because these are a real man's dividends. SCHD. What can I say about SCHD? They are giving out a juicy 3.5% yield. And if we go to their dividend history, we're going to see a lot of impressive stuff. SCHD actually just announced a 75-cent dividend this week. This is actually a 7% decrease from the last dividend they paid out in June. That was for 82 cents. This is actually a 7% decrease since the prior quarter, but this is actually very normal for SCHD. You can see over the years, the amount of dividends has varied, but it generally goes in an upward direction. That is what I love about SCHD. You're constantly getting rising dividends. Now, why are the dividends constantly varying? Well, remember, they're constantly rebalancing this portfolio every quarter to make sure they're getting the right allocations for these companies. So it's not going to be exactly the same. Over time, dividend payments will vary. That's because SCHD and these other funds, they're constantly changing what companies represent them. This is why the important thing to look at is the year over year, quarter over quarter. So in Q3 of 2024, they were paying 75 cents. But in Q3 of 2023, they only paid 65 cents. That's a nice 13% growth quarter over quarter, year over year. Now, to get a double-digit pay raise is fantastic. I'm a long-term SCHD holder. I love to see those dividend raises come in. This is why I love SCHD. I love to buy, stash, and collect cash from my SCHD shares. How easy is this? Why don't people all over the country, all over the world do this? They can just get dividends from SCHD. Now, I'm not going to say it's free money, but these are some of the best companies in the world. And with SCHD, and SCHG, you are now an owner of some of the best companies in the world. And this is what's going to allow us to go from a middle class family to a top 1%er. Now, these two are just two of many fantastic funds in the Discord that people are talking about. They're learning so much from each other. They're helping each other on their journey. Be sure to join us on the Discord community. The link is below. These are people who want to think and grow rich by joining us today. Thanks to my newest Patreon, Anthony, who now sees all my weekly trades, my full $205,000 portfolio. I appreciate your support, Anthony. As you hit that like button and subscribe, check out my videos on the Collect Cash podcast name, wherever you get your podcast. And for the next act,
this is a fun little song about shooting blood from your cock.